Are we on? Thank you very much. Good afternoon. Good afternoon, everyone. Welcome to GraceKennedy's Investors Briefing. My name is Don Webby, and I'm the Group Chief Executive Officer. With me to my left here is Andrew Masado, our Group Chief Financial Officer. Let me take this opportunity to welcome all participants who have joined us for this webinar. We have scheduled the briefing to run for approximately 60 minutes. We'll use 40 minutes for presentations and the remaining time to accommodate your questions. During the question and answer session, you're welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that, gkinvestor@gkco.com, or you may call or send a text to our communications team, who is right here with us, at 876-809-1121 or 876-537-1950. Let me repeat that for everybody. Text or call 876-809-1121 or 876-537-1950. So good afternoon again, everyone. It's a real pleasure to be here presenting our audit results. You'll notice on screen that we are in our red shirts, which means we are in our champ shirts. So today is indeed a special occasion. We're certainly, I believe, in here heading to the National Stadium for the opening ceremony of the ISA GraceKennedy Boys and Girls Championship 113. And as you know, it's GraceKennedy's largest sponsorship. This year we are investing, and I use the word investing, 178 million Jamaican dollars in champs. And we believe, as I had said before on many occasions, it's an investment in our country, it's an investment in our schools, and an investment in our youth. And may I say the world's best youth in terms of athletics will be on display over the next couple of days at the National Stadium here in Kingston, Jamaica. So we are extremely proud of our sponsorship. So, colleagues, I'm going to share a few slides with you, then Andrew will share a few slides, and then after that now, we will open up for questions and answers. So, you know, I with my team, I wanted to share with you what we consider to be our 2024 theme, which 70 of the senior leadership executive team of GraceKennedy got together and said, what is going to be most important for us for 2024? And we came up with building a culture of excellence through great people. And the truth is, that's why GraceKennedy, we are celebrating 102 years this year, and our story continues. The company has been built on a foundation of great people. Mr. Kennedy, Mr. Alexander, Mr. Diaz, Mr. Rain, and all the supporting team throughout the many, many years, over a century. So let's look at the 2023 year in review. So we are very, very proud of our achievement here, where GK obtained a maximum corporate governance index rating AA for the 2022-2023 period from the JSE. And may I say, this is the third year in a row that we have received the highest rating possible from the Jamaica Stock Exchange. So that highest rating resulted in GraceKennedy winning the 2022 Governor General's Award for Excellence, our third consecutive year, and I'm very, very proud, and I have to recognize the GraceKennedy Board of Directors, our Corporate Governance and Nomination Committee, and the executive team, who are fully committed to good corporate governance. And coming out of that, we also won the PSOJ Jamaica Exchange Corporate Governance Award. But I had the icing on the cake, as we'd say, Andrew. Our subsidiary, Key Insurance, was the first runner-up in the PSOJ JSE Corporate Governance Award, which I am personally very happy about, because we have spent a lot of time at Key Insurance. As you know, we acquired it a few years ago, spending time on corporate governance. And it's actually showing in the results of the company, as you'd have seen from their published results on the Jamaica Stock Exchange. And GK Capital, our investment house, won first run-up in the expansion of investors and listed companies. Very, very pleased with our performance. But let me say, corporate governance is in the DNA of GraceKennedy, and we will continue to move forward on that basis. And that is the reason why your company has been so successful over the many years. And I need to recognize Douglas O'Rain, my former boss and former CEO and chairman, who really pioneered the corporate governance initiative at GraceKennedy. And I'm happy to see that we have carried on his legacy, and we're very focused, and we have been winning the awards year over year, as you have seen there. Our harbor cleanup project, as you'll see Caroline Mafood there. Very proud again that we won the 2022 RGR Glean Honor Award in the category of science and technology. This is a big project. We are based in downtown Kingston for 102 years actually. And when you look at the beautiful Kingston Harbor, and I toured with Caroline a few months ago, and let me tell you something, we have a lot of work to do on our environment, and I'm happy to know that GraceKennedy, through our foundation, is playing a harbor. This is the most beautiful country in the world with the most beautiful harbor. And if we can play a role in terms of the cleanup project, we're going to continue to do so. Our environment is sacred to us. We also, you see Gail there, we also won the prestigious Governor General's Medal of Honor in recognition of our invaluable service and long-standing support to the Office of the Governor General. And let me take this opportunity to thank the Governor General for his recognition of GraceKennedy. So let's look at the financial highlights for 2023. And these are the audited accounts. And we were on time, Mr. Masado. Yes. We're one of the companies, I saw an article that a lot of companies are running late. But GraceKennedy was on time in terms of submission of our audited accounts within 60 days.
Yes.
And congratulations to Andrew on that and his team. Okay, so many of you would have recognized that about 2 or 3 years ago, I said to our shareholders at our AGM and to my team that I want GraceKennedy to be a US $1 billion company by 2025. Well, the good news is, colleagues, that we have reached that target a year early, where we achieved a target of US $1 billion, and you'd see the Observer and the RGR News recognizing us for that as part of their headlines. So I want to use this opportunity to congratulate my team for rallying behind this effort. We were all very motivated to get that US $1 billion going. And thank you very much, GraceKennedy team. Really appreciate it. And as you have heard me say on many occasions, the best is yet to come for this great country. US $1 billion in revenue. Here are a snapshot of our financial results. Revenue, this is now in Jamaican dollars, up 9.5%. Profit before other income up 17.9%. Profit before tax up 11%. Profit after tax up 10%. So we have had a good year. 2023 in terms of our financial performance was a strong year, and is really a testament to our team's commitment to executing on our strategy. And again, I can't recognize enough that I want to thank from the merchandisers at the Grace Foods and Services right up to my CFO and my executive team for their support in achieving these fantastic results, along with a board of directors who are very, very engaged in terms of the performance of the group and guiding the management along, including the Honorable Professor Gordon Shirley. So here's a graphic of the revenue performance. You'll see that nice curve there, increasing our revenue by 9.5%, or $13.4 billion, which I think is a great achievement. And Andrew is going to get into some more details in terms of that increase. In terms of profit before tax, up $1.1 billion, or 11%. And I shared the number with you before. Again, I think that's a really good performance. And profit after tax, up 10%. So just to summarize, I think our financial performance, if you look at our revenue of $1 billion, growing by close to 10%, and every other financial indicator on the P&L is growing double digits. So again, I think we are doing we did very well for 2023. There are a number of business highlights which I'd like to share with you. Unibev, you would have seen in the press on our release that we acquired a manufacturing company specializing in fully integrated spring water production. This is where our 876 water, which you'll see here, I'm not sure you're going to catch me. So 876 water and Catherine Speak, our spring water, the best spring waters in the world. That's where they are produced, and we figured and strategized very carefully that if we buy from the source to the bottling plant to the consumer, to the distribution company to the consumer, is going to be a big win-win for us. And you know, colleagues, we acquired the company in October of 2023, and I'm really happy to announce, and I want to recognize Frank James and his hard-working team, that our production output is actually up 50% since GraceKennedy acquired the company. And of course, when you talk about overheads absorption and 50% increase in production, needless to say that the company now is very profitable. So thanks again to the GFS team, Gulab and everybody. 50% up. I know you guys worked hard. We have put in a new generator there. We have looked at the business processes. We have injected working capital, and it is working well so far. Congrats, 50% is really good. So my consumers who maybe from time to time going to supermarkets and not seeing 876 or Catherine Speak, I am assured by my team that you'll see 876 and Catherine Speak in the supermarket. And if you don't see it, please call me. In terms of another business highlight, we increased our stake in Catherine Speak. We're talking about moving from 35 to 70%, so it's now a subsidiary of GraceKennedy and is now consolidated as such. Catherine Speak, as you know, is by far the leading spring water brand, and we are looking at a number of options. I mean, Frank and his team have asked them to look at the possibility of looking at Tetra Pak. We spoke about the environment earlier, to see if that's a possibility for Catherine Speak. So they have to do a cost-benefit analysis on that. But also, should we be looking at some original Jamaica flavored water, June plum spring water, or OTT apple spring water. So we're going to be very innovative, having now bought the Unibev factory to see what we can come up with to please our consumers and grow our revenue base. But both Catherine Speak and 876 is growing. This is one that is a big success story, Steve Whittingham and his team. Can you imagine, colleagues, 2 years ago, we were not in the life insurance business, credit life insurance business anywhere in the Caribbean. Now we're in 13 markets in the Caribbean in 2 years through the acquisition of Scotia Eastern Caribbean Limited and Scotia Insurance Caribbean Limited, which we completed completed last year. May I say to the investor briefing that this acquisition has been very successful. The acquisition has been accretive, meaning it has been profitable from day one, and it has also been very cash flow rich, which Mr. Masada loves in terms of throwing off a lot of cash. So what we're going to be doing now, we're looking at other markets. I've asked my team to look at Guyana. I've personally written to the regulators in Guyana to see if we can start a business in Guyana. And I know the management team is also looking at Bahamas. So we expect that that GraceKennedy Life Insurance business is going to be, in a short space of time, one of the leading profit contributors to the GraceKennedy Group, given the expansion plans that we have. We're looking at more distribution points, more distributors, looking at additional countries. As I said before, Guyana and Bahamas are the ones that are in the immediate future. And we're looking at new products and services. You'll see from my note there that Haven Tech, which is a subsidiary of Mass Mutual, which is, I mean, I have met with them and I've seen it, and I'm not exaggerating, colleagues, when I say cutting edge digital technology in terms of the solutions to the Caribbean. It's really revolutionary. And this is close, right? Because Antigua, we launched in Antigua last year, and we're going to roll out Haven Tech technology to the other countries in 2024. So, you know, in terms of scalability and expansion of GK Life in the Caribbean, I believe that this is going to be a game changer for the GraceKennedy Group. And having a game changer that is accretive and generating cash is always a great story for all of us. Other business highlights, World Brands and the Nestle partnership has been working very well, has been growing. I want to thank Nestle again for the opportunity to give world brands the opportunity to distribute their products, and thank you for your support. Much appreciated, and I'm sure you're happy with the numbers that you're seeing. This one is a big one. I remember launching it at Hope Gardens with Audrey, Scotia General Insurance Advisory Agency, Scotia Protect. It has surpassed every target that we can imagine. Every target that we can imagine, and it's doing exceptionally well. Scotia Bank and GraceKennedy have been working well. Shaluk and his team. And when I asked for the projections for 2024, I'm not going to say it here, but I can tell you the projected growth for 2024 is significant. So thanks again to Scotiabank for believing in GraceKennedy to partner with us as your underwriter for Scotia Protect, and I'm happy that we have been surpassing all the targets. In terms of GraceKennedy Money Services, we signed with Quartz. In fact, when I was showing somebody Unicom, and I said, what is that? I said, Quartz. I said, oh, Quartz. Yes, we have signed with Quartz. We are now into 19 Quartz store with Western Union, and we're hoping within the next 18 months we're going to go up to 50 stores in Quartz. So that is going to be a big deal. Then Link, I've been advised by my team, Margaret Campbell and her team, that we're now in the pilot stage of Link Jamaica, which is an NCB subsidiary, and we're going to be going live in another few weeks, which again is going to expand GraceKennedy's digital wallet offerings. So I'm really looking forward to see how that performs. And our GK Mutual Funds, which was launched with GK Capital Management. It's a little tough time to launch a mutual fund when you have interest rates so high, but this is something that is not a short-term initiative with our partners, Trinidad and Tobago Unit Trust Corporation, but I believe that it's going to be a success going forward. All right, so let's talk about 2024 and the GraceKennedy Group, because 2023 is basically history, and Andrew will present the results and the audit results. I want to share with you some of my strategic thoughts for 2024. All right, the first one is that improve operational efficiency. That is going to be key. When you're working in an inflationary environment with high interest rates, operational efficiency is going to be extremely important. So we measure operational efficiency as one of our metrics. We have a number of metrics. Profit from operations over revenue, right? Last year, the year before, we came in at about 7.2, 7.3, and now we're at 7.5. And I've challenged my team to carry it as close to 8 as possible for 2024. It's extremely important. And by the way, at GraceKennedy, we're a large, diversified group of companies. But the exercise that we do, spearheaded by Andrew Masado and the divisional directors, that every company has to report to me as the group CEO how they are going to improve their operational efficiency. The chart, what you're looking at there, basically saying that we have invested a lot in technology. SAP S/4HANA, we have invested US 7.4 million, which is the backbone of all our food businesses all over the world. And we are beginning to see the benefits of that already in terms of cost savings and customer interface and supplier interface. First Global Bank is undergoing a new software upgrade, enhanced core banking services. So we're investing in technology. And this is just two of many other additions that we are doing in terms of investing in technology, digital transformation to get the company more efficient. So when we speak about 1 billion US in company, my challenge to the team and to myself is how are we going to get more of that US 1 billion flowing to the bottom line? Renewable energy is a big cost, colleagues. Our factories, Carl Barnett and his team has been spearheading that. But would you believe also that high-low electricity bill is just unbelievable? So we are looking at to see how we can get renewable energy in our high-low stores, and of course that will benefit the consumers. Business processes, looking at cost is very important. Looking at your cost structure is very, very, very important. So what gets measured gets done, and operational efficiency at GraceKennedy is going to get measured on a company-by-company basis going forward. Working capital and cash management. Well, you know the saying goes, cash is king. Cash is king. So again, when you talk about high interest rates and high inflation or relatively high inflation, you have to manage your cash, inventory, receivables, and your collections. That is key. We have big plans at GraceKennedy to meet our 2030 vision. A key one is acquisitions. And if you're going to do significant acquisitions, you're going to need cash. Buyback of shares. Our shares, in my opinion and the board's opinion, is grossly undervalued. Grossly undervalued. We're seeing it in all of the stocks on the stock exchange, I would say, in terms of undervalued stocks. And again, one can attribute it to the high interest rates where people are moving from equity investments to fixed income investments. And I'm hearing rates out there at 10 and 11% being offered for fixed income investments. And of course, one of the things that we have said as an executive team, as a board, that we need to look at the dividend yield of GraceKennedy, which is just under 3% now. And we're going to be clinically and carefully looking at seeing how we can improve on our dividend payout to our shareholders, especially in times of a high inflation. So, working capital management and cash management is going to be a key focus for us for 2024. Revenue growth, as you'll see there, the Grace and the Grace owned brand, that's one of the biggest assets that Grace can have on our balance sheet, although it's not recognized yet. Some wise accountant is going to come up with something very shortly, I think. But again, Dave, the Costa and the team, very focused on growing the Grace and the Grace owned brand, and this is worldwide. New geographies, I'm seeing some opportunities in Europe, both acquisitions and organic growth. I'm seeing some some potentials in the USA market. I mean, we're in Walmart, we're in Publix, we're in ShopRite, we're in Loblaws, we're in Tesco. But guess what? There are more Tesco stores and Loblaws stores and Walmart stores and Publix stores that we can expand into. And I know Andrea and Derek and the team, they are carefully meeting with Walmart and others to see how we can get into more Walmart stores. New products, again, is going to be innovation that is in the pipeline. Channel expansion, I touched on that earlier with the new distribution points with existing customers, but also new customers. And retail growth, high-low as a business has been doing extremely well over the last 3 or 4 years. There are plans to put up some new stores. I'm very excited about a blueprint that I got for St. Thomas, the Goodyear factory, and one for Mandeville. And I know that Catherine and her team, they are carefully mapping out other opportunities that may come up. And I touched on acquisitions. This is going to be, for us to meet our 2030 goals, acquisition is going to be key. So what we have done, we have gone out and got professional advice and signed off with investment bankers, Broadspan Capital, that's North America, USA and Canada, PwC for the Caribbean, Wilfred Bagaloo, Piper Sandler, that's for the UK and Europe. And I tell you, Andrew Lerine just showed me a list of 10 active discussions, and I'm happy the way it is going. But you know, when you do acquisitions, due diligence is going to be key, and it must fit into your strategic objectives and direction. Employee engagement, this is probably, I should have started this one as number one. As I've said before, colleagues, our employees at GraceKennedy, which I want to use the opportunity, I can't say it enough, I want to thank all of you for your personal support to me, your loyalty, your dedication, and your commitment to this great company, some of which I have never imagined or seen in my lifetime. And thank you again to the GraceKennedy staff and the team, from the lady that serves coffee right up to the board of directors. You know, a light bulb went off in my head a few years ago where the employee engagement results were very good, but the profitability was very good. And I said, it was an aha moment where I said there's a strong correlation between employee engagement and profitability. And I am so convinced that is so. So for 2023, our employment engagement score was 73.4%, which is the highest in the history of GraceKennedy. And of course, as you can see from our our results, the profits and revenue is the highest it has been in the history. So my hypothesis is proven to be correct. So if you're going to run a good company, you have to have employees that are motivated, dedicated, and engaged. And you'll be on the right track, I can assure you. I believe, again, and as I said it too, I think it was Mr. Staple at the last AGM, manufacturing is going to be a competitive advantage for the GraceKennedy Group. You'd see on the screen here some of the products that we are exporting now. Our export target, we export about 32% of our production in 2023. I've challenged the team, Zach and Carl Barnett and everybody. I want to see that at 50% by 2025. We have invested behind it with Nalcon, with renewable energy to be competitive. But when you talk about food security and food sustainability, not only from a corporate point of view with GraceKennedy driving earnings, but from a national point of view in terms of food protection, manufacturing and investing in manufacturing, I believe very strongly that is going to be a key strategic driver for the GraceKennedy Group of companies. So when you talk about authentic, you're looking at those products there. Western Union, as you know, Western Union, well, let me say remittances. Last year, remittances into our country, Jamaica, and I can say it's probably reflected in most other Caribbean islands, generally, we're down. I think Jamaica, we're down by about 2%. My theory is, again, is that when inflation is high in the USA market, the disposable income of our brothers and sisters in the diaspora has been under some stress, and they are unable to send as much as they would like. What I've noticed is that they're sending small amounts more frequently, which is understandable. The good news is that for the last quarter of 2023 and for the first month or so, I haven't seen the official BOJ figures yet, but I'm seeing somewhat of a recovery of our remittance numbers. I'm not sure about the national numbers because the numbers are not ready yet. But remember, we had a very focused plan. Impact, marketing, pricing, agents, focusing on our customers, our consumers, and compliance. Number one, no compromise for compliance. So Western Union and GraceKennedy, we've been working very hard to stimulate the sending markets, to encourage our senders to send through. First of all, send through Western Union, whether digitally or through the retail outlets. And I would say, and I'm being cautiously optimistic, that for the last 5 months I'm seeing some really, really good signs, or encouraging signs. I know everybody's interested in GK1. We have made a significant investment in GK1, which is our digital wallet. Right here at GraceKennedy, developed through our digital factory under the heading Digital Transformation. And I've been advised that GK1 is the #1 digital wallet for processing remittances, and based on the BOJ data. So this is authentic and can be verified. So thanks a lot to the GK1 team, to everyone in the digital factory. I think this is a great achievement, but there's a lot more to do in terms of GK1. I'm extremely excited about it. GK1, we're going to be expanding into 4 new countries, including Trinidad, Guyana, Cayman, and the BVI. And we're hoping that, we are speaking to the regulators now, and we're hoping that will complete certainly before the end of 2024. And I've already mentioned about Link. One of the good things, you see, about GK1 colleagues is that GK1 is actually what I refer to as bilingual. In other words, GK1 can be converted with the press of a button to a Spanish-speaking app. So Grace Burnett, she was in the DAM rep, and I said, Grace, let us try and see how we can market GK1 through Western Union in the DAM rep and other Spanish-speaking countries. So this is a very exciting journey for us with GK1 and digital transformation. Big, big business. Game changers, I would say. All right, so I finished all my presentations using my GK1 2030 vision. Just as a reminder, you have all seen the slides already. But let me say, to bring superior products and services to customers that contribute to a better global society and greater financial well-being. And you'd have heard about the #1 Caribbean brand, providing strong returns and improve the quality of life. So that's our purpose and our vision. These are numbers to support those purpose and vision. 70% of revenue by 2030 outside of Jamaica. Revenues of 2.1 billion. Profit before tax of 250 million. Yesterday, Andrew will expand on it, I'm sure, in the question and answer about listing on our overseas exchange. I've already, and I can't emphasize it enough, motivated employees, because without that, you're not going to get anywhere. And ESG, which I'll share a slide with you. So these are this is our guiding star. This is what we live and breathe in terms of revenues outside of Jamaica. 2.1 billion, 250 million. And I want to tell you, when you look at study the annual reports, Jamaica is actually growing significantly faster for 2023 than overseas. But what we're saying is that because of the size of the overseas market and the expansion plans into Europe and the USA and Canada and other countries, the population is just going to be there for more growth. We're very committed to this, and what I can say to you, when I presented to the board in December 2023, early days yet, we didn't leave the blocks, to be honest with you. We are ahead of the targets that we had set ourselves, because all of these numbers that you see here are broken down annually, and as an executive team, I review them quarterly of how we're doing against the target. And if we're not making the target, what can we do to meet the target? What changes do we have to make? So this is monitored very carefully. We spoke about mergers and acquisition already. Obviously, when you look at the 2.1 billion in revenue, you know it's going to call for acquisitions and balance sheet restructuring. Andrew, I'm going to leave that for you to speak to in the question and answer or anything. Well, a lot of work is being done with Andrew Masada, his team, and PricewaterhouseCoopers. But basically, what we need to do is to re-engineer the balance sheet of GraceKennedy in foods and financial services. And you know, with IFRS this and IFRS that, it's a lot of work for my finance team. ESG report. I'm so proud of this one. This was led by Gail Solomon, our corporate secretary and legal counsel, where ESG report was launched on September 29, 2023. And colleagues, let me tell you something. This is not a nice to have anymore, I can assure you. When you speak to any investment banker, right? The second or third question, what is your ESG framework? Our suppliers all over the world, what is your ESG framework? You know, so, you know, I was very pleased that when these questions were asked, I could hold my report very proudly as a Jamaican company and say, here's my ESG report. This is a big deal for us at GraceKennedy. We never used to call it anything, and then we started to call it corporate social responsibility, and we have moved it up now to ESG report. I want to repeat again for investors and others. ESG in the future is not going to be a nice to have. It's going to be a must have if you're going to do business internationally. And I won't be surprised if in Jamaica it becomes some sort of a mandatory thing. Well, you see the plastic ban and that sort of a thing. All right? Okay, sharing with the core values. And every time I finish my presentations, I share the core values of GraceKennedy. Because you know, you've been asked the question, hey, 102 years. Well, this is the secret formula, not a secret anymore, of why we have existed so long. And it's because of our core values. This is in our DNA now. We live, we breathe, we sleep, we wake up every day with our core values. Honesty in what we say and what we do. Our integrity, our word is our bond. Commitment to quality and service. Very important, we're a humble company. Humility without pretension or self-importance. Trust to inspire and earn confidence. And respect. respect for our customers, our staff, our peers, our managers, and our directors. So ladies and gentlemen, I'm now going to hand over to Andrew Masado, who will take us through his presentation, and then we're going to open up for questions. Andrew, over to you, my friend.
Thank you. Okay, just going to give you some highlights of our financial performance for the year 2023. As you will see and heard earlier in the presentation, all our key performance metrics are actually showing a positive performance. So starting with the top line revenue, we are now a US $1 billion company earning $155 billion, 155 billion Jamaican dollars in 2023. That's up 13.4 billion or 9.5%. Our profit before other income, and these are kind of your core performance, core profits before you have the kind of other income line item, is showing good growth at 17.9%, up to $7.5 billion. So this profitability, you'll see, is coming from improved margins, is coming from cost containment. We also saw in 2023 a kind of stabilization of costs for business, and we also grew our revenues profitably. So that's where that growth is coming from. And then profit before tax, you're seeing at $11.4 billion, up 11%. This is really a reflection of improved performance throughout the group. I'm going to get into the segment results a little later to highlight a few. But just to give you a quick snapshot, the profit before tax also includes our associated companies, and we're very happy to see that a lot of our associated companies, both in Jamaica as well as overseas in Barbados and in the US, are doing very well and showing improved performance. In terms of net profit attributed to shareholders, this is a profit after taking out the non-controlling interest. So this is really the profit that is owned and earned for our shareholders. That's up 10.4% to $7.8 billion. In terms of our assets, we've seen a significant growth in our asset base, up by 11.9% to $219 billion, an increase of $23 billion. The key areas here would be our cash holdings, our investment securities, as well as our loans to customers, and then our intangible assets. As you heard in the presentation earlier, we did a number of acquisitions in 2023, and so we've added intangible assets in the form of agency arrangements, brands, as well as goodwill. And then we've also invested in new software, such as the SAP S/4HANA core operating system for our food business. In terms of our stockholders' equity, you see that is up by 8.9%, or up to $79 billion. And from that improvement in equity and from our profits, we've also been able to distribute more as dividends to our shareholders. And so you will notice that for our dividends over the last 5 years, you see steady growth. Last year we grew by $150 million, 7.5%. And over the 5-year period, you'll see that we have grown by 40%, or $600 million over the period. So the group continues to distribute its profits and return money to its shareholders in the form of a cash dividend. And you probably have heard already that for our first quarter 2024, we have declared a dividend of 52 cents per stock unit, approximately $515 million for the first quarter, and that's up from a 50 cents per stock unit dividend last year this time. So again, consistent dividends and growing steadily. In terms of our segment performance for revenue, you will note that 3 of our 4 segments are showing growth in revenue and strong growth in revenue. In terms of money services, that is a marginal decline of 1.9%. You heard earlier in the presentation the challenges with remittance flows into Jamaica, a decline in remittance flows, and that has affected the revenue of our money services business. But even within money services, our bill payments business grew by over 10%, so we are showing growth in certain areas there. In relation to insurance, the acquisition of the second GK life insurance business, that has added to the revenue of the insurance business. And our general insurance companies have also done very well. So what we're seeing is our GK General as well as Key Insurance businesses both showing good growth in revenue. In terms of banking and investments, we see that is up by 20%. That has been driven a lot by our bank, First Global Bank. All their key metrics are up, so their revenue is up, the loans to customers is up, and our deposit base is also up. So all trending in a positive direction on the banking and investment sides in terms of revenue. And then on the food trading side, what we've seen is both for our domestic and our international businesses are growing. On the domestic side, we saw good growth for our distribution businesses, in particular World Brands, who now does additional business with the Nestle portfolio. That showed strong growth for 2023. And then our retail outlets, our high-low supermarkets doing very well. We opened high-low Negril, a new store in Negril, towards the end of 2022, and it has performed well throughout 2023, showing consistent growth. So on the international side for the food business, we see both the UK and USA businesses showing very good growth, both for our Grace brand and our Grace-owned brands like Lafay in the US and Nourishment in the UK. So those are the kind of highlights on the revenue side. In terms of profit before tax, you will see that 2 out of 4 of our segments showed growth. Overall, we had an 11% growth in our profit. So overall, strong growth for the group. In terms of money services, I had mentioned earlier, on the revenue side, you saw a marginal decline, and that flowed through to the bottom line on our money services businesses, showing a 5% decline there. However, insurance, up by 55%, that is driven again by our acquisition of the GK Life Caribbean business, as well as growth in our businesses on the general insurance side. And also for Canopy Insurance, they had a very good, Canopy Insurance is our group health and group life business in Jamaica, joint venture. And we have done very well for 2023 in that business. In terms of banking and investments, First Global Bank has done very well, showing growth. However, what you would have known is that the market conditions on the stock market has reflected a decline generally in equity prices, and that has impacted the results of our equity holdings, the fair value of our equity holdings. So that decline in the banking and investment division is primarily a result of unrealized losses in relation to the equity portfolio. What you would have seen for GraceKennedy is that our stock price is actually down by a lower percentage than the market. So GraceKennedy's stock has been fairly resilient, but some of our holdings in third-party equity instruments would have declined. On the food side, you'll see that has grown by nearly $1 billion in terms of profits, up 17%. And a lot of that has come from improved efficiency. It has come from improved margins and very strong cost containment and working capital management. So we're very pleased with the results on the food side. And overall, you'll see that the group has been resilient even in difficult times throughout 2023. And I think that's the highlights I'd want to bring to the investors' attention. Thank you.
Okay, thank you. Thank you very much, Andrew. I'll just do a quick time check, how it is in terms of time, so I can know how to manage, because there are a couple of questions.
2, 3.
Okay, all right, we'll know how to manage. All right, colleagues, there are a few questions asked in in a different way about stock price, which is obviously when you have a company and the stock price is going down, it must be of concern to all. Andrew did make the comment that our prices, the reduction in our price is less than the market. So the question is, it's a market situation. And as I said in my presentation before, I believe that the higher interest rates where people are moving from, and especially the fund managers and the pension funds, a lot of them are probably in the short to medium term moving from the equity market to the fixed income market where the returns are obviously higher in this kind of environment with the higher interest rates. And by all indications, it would seem that certainly for the first half of this year that the higher interest rates will continue. So the question is, what are you doing about it, GraceKennedy? I just looked on the stock market performance today, and the Grace stock is down to just about 74, 73.49, with very, very little stock being traded. Very, very little stock being traded. When you look at some of the blue chip companies on the Jamaica Stock Exchange, they are down significantly more than the Grace stock. So what should we do? Our focus must be on delivering results. Revenue, profit, keep focus on our strategic plan and vision. And I believe that what you're seeing here, in terms of the reduction of the value of stocks all across Jamaica Stock Exchange, it's going to be short term. We have seen the cycle over and over, all over the world, right? Not only in Jamaica. And there's going to be a point in time that when the rebound happens, it's going to happen very quickly, and the stock price is going to increase significantly. So the focus of the executive team and the board, execute on your strategy, continue to produce increasing results in terms of revenue and profits. And at some point in time when interest rates go down a little bit or the market mood changes, then you're going to see the Grace stock and other stocks increase in value significantly. What we've also done, and we've been very vocal about it, and we're one of the few companies, we say, now listen, our stock is undervalued, right? Significantly. So we started a share buyback scheme, and we have just about my notes say $1 million here, but we were out of the market because of the blackout period, which is a sensitive period, where the buyback scheme was put on pause until the audited results were ready. Now the audit results are out, so I've been advised by Andrew Masada and the team that the buyback scheme will resume very, very shortly. So that's one. The other thing that we need to do, and as I said in my presentation, we need to look at the dividend yield. We did an exercise across the region, and the truth is that the dividend yield of stocks in Jamaica are very, very low. And so we need a clear strategic plan without compromising our acquisition strategy or other strategies of how we can improve our dividend payout. I'm just showing you the chart. We have increased dividend payout for GraceKennedy significantly over the years, but the yield is still low, and that's something that certainly we'll be studying. But to improve the yield, as again come back to the base, you have to generate cash, you have to produce profits, and you have to grow your revenues. And that is the key focus in terms of how are we going to, as somebody said, regain confidence in the market. I'm hoping that this investors briefing and communicating our strategy will help you, the investor, to regain confidence. I'm sorry that you lost it about the stocks on the Jamaica Stock Exchange. Andrew, you want to say anything about the buyback? Anything you want to share with the investors briefing?
No, just to say that, I mean, we have initiated the buyback plan starting in November of last year. As you had noted, there was a period that we had to pause until the audit results were released. We are doing it both in Jamaica and the Trinidad Stock Exchanges on which we're both listed. And I mean, I think there has been interest in the program, and we'll continue it through this year.
Okay, thanks. All right. What contributed to the growth in FGB revenue and profits in 2020? First, Global Bank is having a very good year. all the balance sheet items are improving in a significant way. Our deposit base is going up, our loan portfolio is going up, and once you have those levers as a bank with prudent risk management, headed by the chairman Peter Moses and Ratcliffe Daly, you're going to produce results. And they have also been managing their costs very, very well, which I'm extremely pleased of when we talk about operational efficiency. So First Global Bank, in terms of growth of loans and deposits, we have seen a significant increase 2023 over 2022, and at the same time we are managing our costs very carefully. So looking for a great 2024 from First Global Bank. Smallest bank, but as we say in Jamaica, we little but with Talawa. And First Global Bank is certainly Talawa, guided by the 100% ownership of GraceKennedy Limited. And we are committed to commercial banking, and we see that this bank has a lot of potential for future growth. Andrew, I think this one is from David Rose. With GK having 70% ambition of revenue outside of Jamaica, will there be a future segment analysis to give context to other countries and regions you do business in? But we have that in the annual report already.
Yes, so
annual report for context, and then he's talking about PBT, total liabilities, and so on. But that's what you're going through with PwC now, anyway.
Yes.
Yeah,
yes.
And
in terms of our segment analysis, we do have a geographical segment analysis, which shows that our revenue now inside Jamaica is approximately 57%. And we do track it by region. So we have North America, we have Europe, and then we have Caribbean and other countries. So we are even just within that region of inside and outside Jamaica, we're also breaking it down into the core markets that we're focusing on.
Yeah, and David, what I suggest to you, yesterday we spent a few hours going through our MDA, Management Discussion Analysis. Have a look at last year's, and there's a page in there that actually breaks down revenue by region, and of course for 2023 that will be updated. One of the things that if we list on an international stock exchange, right, you have to bear in mind that the standard sometimes is that much higher in terms of disclosure. So we will have to go through that, and that's what Andrew is doing with PricewaterhouseCoopers, to go through very carefully in terms of disclosure and the balance sheet and the P&L and that sort of a thing. So it's a lot of work. That's what I said in my presentation, David. A lot of work to be done, but we are committed to get it done. What was the performance of Catherine's Peak Bottling Company Limited in 2023? Know that the associate section is blank since it's now a subsidiary. Well, what I can say to you, and Andrew can probably answer that one, is that for the full year, Catherine's Peak were having challenges in terms of supply. As I said to you, as I said to the briefing earlier, since we acquired the company in October until now, production capacity is up 50%. So we would expect that the Catherine's Peak revenue and 876 revenue will go up significantly for 2024. And you had to answer the question about associate versus...
Yes, so for Catherine's Peak, we acquired majority shareholdings in the first quarter of 2023. So you'd have seen it move from that line. Its profitability remains stable, so the company has actually shown some improvement, but there was a lot of a runway for even further growth in that business. Now it's a subsidiary. So the difference is that as associated in a single line on the balance on the P&L or profit or share profits, and now it is showing up in each line on the P&L. So the revenue line, cost lines, and of course in the profit for the group.
Thank you, Andrew. I mean very careful how I speak about acquisitions. So last year we acquired controlling interest in Catherine's Peak. We acquired 100% of Unibev, and we acquired Scotia Insurance Caribbean Limited. What I can say at this time is that when we speak to our investment bankers, we have 10 active discussions going on now, both inside and outside of Jamaica. I'm sure all will appreciate that when you talk about acquisition and negotiation and that sensitivity, and we're a public company, we have to be very careful. But I think I can say, as I'd said before, that we're having active discussions with 10, not only in foods, but in financial services, and not only in Jamaica, but outside of Jamaica. Time running. Oh, this one is probably above my pay grade, but we need to note it for Catherine. High-low stores uses small tiles that buckle when trolleys are used. This feels uncomfortable for shoppers and is also probably why your trolleys fail so often. Your competitors do not use tiles for supermarket floors, which results in smoother sensory shopping. That's actually from Stephen Jackson. Interesting, Stephen. Tell me which store exactly, and I'm going to personally go and push a trolley through that store and see what the feeling is. But I take your point. Usually smaller tiles are a little bit more uncomfortable in terms of your shopping, and I'm certainly going to speak to GraceKennedy on it because your question is probably, or your point is probably timely because, you know, we're going to be doing some refurbishing of some stores this year. So we're going to have to bear that in mind. But Steve, what you do, send me a WhatsApp now or a text and tell me which store exactly you're referring to so I can go and see it myself and speak to Catherine about it. All right? The other question from Mr. Jackson. GK, we're talking about the thin margin. One of the things, Stephen, about the thin margins is that when you're in an inflationary environment, especially in the food business, especially in Jamaica and overseas, when your supplier move your cost on you and packaging raw materials go up, you can't pass that on to the consumer because they just can't afford it. So we have had to, at GraceKennedy, absorb some of the cost increases, especially in this inflationary environment over the last 2 to 3 years, and that is resulting in our margins. But what you are seeing in these results, with the 7.2 moving to 7.5, we have found other ways to become efficient so they can get that flow to the bottom line. You also have to look at different packaging material, different formulations, and that sort of a thing to see how we can become more efficient. Renewable energy, which take costs out of our manufacturing business. This is not a project. This is an ongoing exercise in terms of reduction of cost because your consumers are feeling it. Listen, when you're overseas, you know, and your supplier call you and say, listen, I'm giving you a 5% increase because I can't absorb it anymore. And you go to Walmart, or Publix, or Loblaws, or Tesco. You think they're going to grant you a 5% increase? You'll be fooling yourself, and that's what an international company is about. Right? You have to build a relationship with these multiples, because they negotiate very tough, as you would know, and you have to look at other costs in your business that you can reduce, if not eliminate, and you have to look at how you negotiate with your suppliers to get the best deal possible. You made a point here about acquisitions. And as I said before, the Scotia Life acquisition has been tremendously positive for the GraceKennedy Group. When you talk about margins and you talk about generation of cash, we haven't done an acquisition with that much positivity on the GraceKennedy books for a long time. So you can't broad brush acquisitions in terms of thin margins. I think that would be a wrong hypothesis, but each one will be taken on a case-by-case basis. And that's why I made a point also that we have to be very sensitive in terms of how we negotiate with acquisitions. I need to speak to Catherine about that high-low one. Stephen, just send me the which store that is now so I can dig deep. We're coming up to wrap-up time. So my good friend Al Edwards is asking the question, Don, will you remain at GraceKennedy to take it up to 2030 to meet the 2.1 billion? Al, I was hoping that you and I will be on the beach having a pina colada at that time. I doubted very much that I'll be around, but I have a great team in place. And we have very good succession planning at GraceKennedy. So I'm sure whoever I hand the baton to, and whenever I hand the baton to that person, they are more than capable of taking the company to a 2.1 billion company with 75 billion in million in US profitability. And at that time, hopefully the stock price is $2 US, so I can buy a drink, Mr. Over today. But 2030 is a far way off, but let us see what happens. But it's unlikely that Dan Webber will be the group CEO in 2030. You need to give other people a chance to play their role in the company. And I've played mine. I've been the CEO from July 2011. So I'm trying to play a good innings. I've taken it so far. Still have a little way to go, but let's see how we get from there. I've been advised by my Director of Operations, Susan Stanley Nam, that we actually have 230 people in the Investors Briefing. So colleagues, 230 people, that must be a record. Thank you so much, much appreciated for joining us. Can I squeeze in one or two more questions? All right. How is GK navigating the higher costs from the current inflationary environment and higher interest rates? I think I mentioned that already, David. You have to look at your business processes. You have to be very, very detailed in terms of how you manage cost, right? Sometimes I don't delegate managing costs sometimes, boss. You can't do that. You have to look at it yourself. And I have seen some costs coming through, like security costs and all them kind of things. No, man. You have to look at that very, very, very carefully. And of course, investing in technology, as I said before, to improve efficiency going forward. Inflationary environment is really a bother throughout the world because, as you know and you have heard in an earlier comment I made, it really put a stress on your margins. So you have to be very sharp. We have good people here, Zach Mars and others, that are fine-tuning the pencil to see how we can ensure that we get the best deal from our suppliers. Shipping rates, that's something that you have to look at when you're a trading company. Not GraceKennedy Trading Company. We're an international food company headquartered in Jamaica. So we have ships going to the USA, Canada, UK, Jamaica, just to name a few. And we have to ensure that these input costs are properly negotiated with the right expertise going forward. So I would say, look at your costs. Cash flow, can't emphasize cash flow. Cash is king. When you're in an inflationary environment, a higher interest cost, the truth is, right, when you're in a higher inflation, when you're in a high interest rate regime, if you have excess cash, you're going to get much more interest income on it. So collect your receivables, look on your inventory working capital, bring your working capital in line, and you'll be good to go. Catherine, speak. I think that's about it. Hold on, let me just make sure. Oh, somebody's asking about the ICD property and how much you paid for it. I'm not prepared to disclose that at this time, but let me share my vision with you. Right? So in 2019, GraceKennedy invested upwards of 23 million US in this building here. And we own a lot of real estate on Harbour Street, 64, 73, and other real estate that we have. So when the opportunity came for us, including the Breezy Castle playing field, which I have some great plans for. As you know, I'm a sportsman, and I believe in investing in sports. So the Breezy Castle playfield, I want to fix that up nicely so every person residing in downtown Jamaica can be proud of it. So when the opportunity came up with Joe Matalan and Peter Meledo for us to invest in the ICD properties, we quickly jumped on it. And why did I jump on it? We have a vision. I believe that we want to start a real estate investment trust for downtown Kingston. In other words, you put all the properties that GraceKennedy own in a trust fund and we market it. And I can tell you, I mentioned it in a meeting that I had on the Jamaican diaspora when they heard that vision of a real estate investment trust. Right? They were like children, I want to invest, I want to invest, I want to invest. But we have to ensure that we have the right critical mass before and the right legal framework before we launch that. So the vision for the ICD properties on the downtown Harbour Street, and there are other properties that we have, which is held through GK Properties, is actually to unitize it, monetize it through a unit trust, real estate investment trust, and list it on the Jamaica Stock Exchange, etc. That is the bigger vision. Am I exploring other, or are we exploring other options? Yes, if a property come up on the ROE and ROI and the payback and that sort of a thing by my number crunchers and it fits into our overall strategic plans and vision, yes, of course. We're committed to downtown Kingston. Any opportunity come up, we're going to be there investing in it. One of the things that I say to you, also, in terms of the design of this building where we are now, the corporate headquarters, investing in parking was one of the greatest decisions that we have made. Because when I drive through, I can't believe the parking lot is almost full. The covered parking. So whoever is investing again, and maybe I'm speaking to my good friend Stephen Facey or Michael McMorris, parking is going to be very important as we develop this beautiful downtown Kingston. It's truly a jewel in the Caribbean. All right, folks, I think I've overstayed. I'm getting the whole of myself. I have one more. Let me see if I can pull in one more. Your debt equity, Andrew, this is for you. Your debt to equity is 28%. What is the amount you spend on acquisitions? Is 50% a long-term debt equity? How do you know that?
Yes, and I mean, we've actually stated this in our note 3 in terms of our capital management ratio. And so yes, 50% is kind of where we feel comfortable without putting the company's capital too much at risk in terms of our debt servicing ratios. So we do have some runway in terms of additional acquisitions through financing.
Somebody, I think is a GraceKennedy employee, asking about opportunity to own stock. As you know, for GK100, we issued quite a bit of stock to everybody, and the take-up was the highest we have ever seen it in terms of stock options at GraceKennedy. So I would assume that you have joined GraceKennedy after GK100 stock offer was made. This is something that I'm constantly in discussion with the compensation committee at GraceKennedy, chaired by Professor Honorable Gord Shirley. And we're always trying in some way to facilitate ownership by our staff of the Grace stock. I'm very sorry if you missed that GK100 one, because that was very attractive, because I actually got stock. But I'd say, however, that based on the current price in the GraceKennedy stock price, boss, if you have the little cash, even if it's one cocoa full basket, buy the Grace stock, because it's a great, great, great investment. All right, I think that's a good way to finish. The questions can continue to come in, right? Oh, okay, all right. Okay, so ladies and gentlemen, thank you very much. Do we have a date for AGM that you can tell me? Just check it out for me now. All right, ladies and gentlemen, this brings today's briefing to an end. Thank you for your time and your participation. I'm overwhelmed. I'm happy that we have had over 213 people online participating in the discussion. And thank you for giving me that opportunity to share with you the vision and the results of the GraceKennedy group of companies. So as of tomorrow, a link of today's broadcast will be available on our corporate website, www.gracekennedy.com. That is, the broadcast will be available as of tomorrow, www.gracekennedy.com. I need to be on our YouTube. Today? Okay, all right. We're not on TikTok business, right? I'm just teasing you. That's a USA joke. If you have any additional questions, please submit to the gkinvestor@gkco.com. So let me say it again. If you have any additional questions, please submit them to gkinvestor@gkco.com. Let me say it again, and I'll say it over and over. We also value your feedback on the streaming experience and any suggestions you may have as to how to improve this experience. I want to say again, thank you everyone for joining us. I want to big up my GraceKennedy team members, the employees of GraceKennedy. Really appreciate your support. And as we say, colleagues, 102, but the best is yet to come. God bless all of you, and we talk again soon. Thank you.